It all started with a small SaaS company in Finland. Today, it's used in over 80 countries around the world. The journey, anything but easy. Lessons learned, key insights, hard-earned experiences. This is the founder's point of view.
Welcome to the Founders Point of View podcast, and today's episode we have a topic about compensation in the startup.
Yeah,
How compensation works in the startup.
exactly. Exciting topic because it's quite different than in bigger companies.
Yeah, I think that in the main idea behind this topic is that as a startup, of course, you compete for the same talent against those bigger enterprise large companies, but you cannot compete on a salary with those. So when you try to recruit the same people who the large companies are also trying to recruit, it is pretty hard when you are a startup, and that's why we decided that we should do a episode about this topic and try to share our own experiences and learnings. And we have noticed that in the compensation there are three kind of areas where you can focus on as a founder, and how you can also think through the topic. And the first one is the realistic cash compensation.
So the monthly amount you get.
The salary.
Yeah.
The objective money what you get to your bank account after the taxes and other costs.
Yes.
That's the number one. And the second one is the taking care of the future upside and the valuation of the company. And so it's a equity or this company shares or options. So that's the second one, and that's the one what you can many times you can use in a startup, and what is not possible to use in other companies so easily, and it is not common to use it there. Of course, the public companies can use their own shares and option programs more easily. And then the third one, which is maybe publicly a little bit underestimated, is that those everyday rewards like work conditions, flexibility, and the impact and the meaning of the work. So those are the three categories.
Exactly. Exactly. That's the total compensation. It may sound a little bit weird or even wrong that we are talking about flexibility and different working models and this kind of softer values together with the money compensation, but you may be surprised that it actually can be quite huge thing for your future and your lifetime money compensation as well if you work in a startup.
Yeah, and especially if you are younger talent and
exactly.
you are starting your career, that might give you a very big asset compared to the other career paths you can choose. All right, the first one, the cash compensation, which it is always hard. We had tried to recruit, for example, some senior level software developers like years ago when we didn't have a possibility to pay that amount of money like the others were paying. And still we were able to recruit them. But we needed to talk through the very openly realistically that why we are not able to pay that amount of money what
Yeah.
they might get if they choose some other bigger large company. So you need to, as a startup, you need to be very open that that's the level we can pay, and have that discussion during the job interview process, and be very transparent about that. And then I think that how we have managed to get those maybe a little bit more senior guys to join our companies, that we have been able to tell them that what kind of salary levels we can offer in future, ideally if everything goes like we have planned. And also the total compensation and the total salary, we have added some bonuses or some kind of other ways to add the salary level higher, and the total salary level have been even more bigger than it has been in the other companies because of those bonuses which we have paid. And of course that means that those bonuses should be those should be connected somehow to the metrics of the
Your
company, and ideally,
billings and
yeah,
everything.
and ideally those goals are some kind of cash flow revenue goals also.
Yeah.
So you will have, as a startup, you will have the real possibility to pay the money because you have the money also in your cash
Yeah, I think
in
it's
the bank account.
completely like different world. And for example, if you have like 4 really big companies, and they all want you, you can just play the game and try to increase the salary level. And some of those companies can even pay like quite high salaries for nothing. Basically, you don't. It's not stressful. It's not like super hard work. You have some nice title and some responsibilities and so on, and like relatively high salary and so on. In startup world, it needs like extra transparency from both sides. So basically, startup has to be like super transparent how much they can pay to be like sustainable and so on, and also they kind of require from employee side that how much money do you need to stay alive and so on. And then all those commission models, bonus models can change the game. They also have to be like sustainable because company gonna stay alive.
Yeah, and of course we truly believe that ideally you can follow the market value of the employee, of course, and based on the experience and the seniority level and the skills they have. But it is not actually easy to objectively check that what is the real seniority level or the skill set they have without testing that. And in the startups, what is good that the output of your work, you cannot hide that. So it's pretty quickly obvious to everyone that what is the value you bring to the team or bring to the company after you have joined the company. So that's a tough word also. Of course, if you go to the larger enterprise companies, I think that's possible to much easier to hide the value you are bringing to the company. But I don't think that's what people actually want. I think that everyone would like to be would like to be shown and feel the value and feel the meaning through the value what they have brought to the company.
Yeah.
Okay, so that's how we have handled those question is that we have been very transparent that what is the level we can pay now, what might be the level in future, how we could add some bonuses or other provision models the salary to, and with that the total salary can even be higher than the fixed salary.
Yeah, exactly.
Picked from some kind of salary level Excel, what bigger companies use. Okay, and the second one, the equity and the options. And would you like to shortly, in brief, open that what means to what is the difference between the options and the equity?
Yeah.
Commercial break. Trustmary in 30 seconds.
Trustmary helps companies to automate the review and feedback collection and utilizing in their marketing.
We are a Finnish company, but we are already operating in 80 different countries.
Our product is especially designed for the companies doing service-oriented business coming from traditional industries.
If you need any help related to these topics, just reach us out on LinkedIn. We are happy to help.
And now back to the story.
So basically, those are tools to like commit people to the company, and I think like traditionally, option program opens when the first investor joins in the company. That's especially for the first-time founders. I'm not sure, it would be interesting to know if it's different case for second-time founders, because personally I think that option program is way better for committing people to the company, like early employees and key employees, than like just giving shares. But the main difference is that share is like straight share for the company, so you immediately are one of the owners of the company. You have to give some money to the company or existing owners if you want some shares. Then you can vote at the annual general meeting and so on. So you are like full owner and that's it. But you have to use your own money to get those shares.
And you need to join, typically you need to join the normal shareholder agreement.
Shareholder agreements and so on. An option program, it means like they are sharing options and you can at some point use those options to buy some shares. But usually the idea is that when the company does the exit, it will sell all the option
option rights.
Option rights, yeah, exactly. The buyer, and then you will get some money. So basically, you don't have to really use your own money to buy those shares. There is like theoretical buying price, of course, and you have to kind of pay that when giving those option rights away, but you don't have to use your own money. So that's the idea, and it's easier if you want to like commit your key employees or early employees to the company to use those option rights, because they have usually like 4-year vesting period, so you have to stay with the company 4 years before getting all of those rights, and then if you leave, you just usually give them away and so on.
Yeah, of course you can. In many times you can decide if you want to buy those vested option rights, but you leave the company and that's the moment where you should put money in, and of course the price of the option, what is the valuation set it for the option, that of course that's influencing that is it reasonable to buy them or not. But still, and many times
you
people
are
don't pay.
not with the company anymore.
Yeah.
So it can't affect the way company is going from now on. But if you are like shareholder, you have already bought those shares.
We have used both. We have had those direct shares, and we have also given those options. And when we started, we sold the direct shares from the company, or the other founders, they sold their own shares to our employees. But I think that the options is much more easier for everyone,
Yeah,
and
definitely.
there is not also that money thing at all, and you don't need to, as a young talent and in a new startup, you don't need to use your own money to get the ownership benefits for the future. And of course, the benefits might be a little bit lighter because of the options and not the direct shares, but still, you don't need to take that risk at all. And the founders and the actual owners of the company and investors of the company, they are taking care of that capital risk of the company, and you just enjoy the possibility, enjoy the potential of the company if the exit comes.
Exactly.
So, but you need to be realistic. And many times, for example, when people have, we have had those option programs, and people have got those vested options, and they have asked us that they have a little bit extra money now. Would it be possible to now pay those actual shares because of the options which have been vested? But we have typically answered that let the option program be still open, and please don't use money now because it is not giving you the big tax benefit to do it now, and we have recommend to put that money, for example, the index or some other instruments.
Yeah.
So it is not that risky at all.
But yeah, anyway, it's like giving something, shares or option rights, so on. It's like very central part of the like commitment and compensation in startups.
But I think that's the good thing, that after ideally, I think that all the employees they can feel the ownership that they can benefit they can benefit if the valuation of the company is increasing, and one day if the company is doing exit, like the startups try to do, because of the investors behind. The investors want their money back with some extra. Of course, they want to do the exit, and that means that ideally all the valuation of the company is going higher every month and year, and of course that would be good if the employees got also some benefit from the valuation, increased valuation. And the owner mindset is doing good for the company if everyone is thinking through the company valuation.
Completely.
Yeah. Okay, the third thing, the everyday rewards beyond money, the work conditions and the autonomy, what startups can typically offer better than not those big companies. Of course, there are startups where that is totally opposite.
Yeah.
The work conditions are very low, and the autonomy is very low, and the feeling of the impact is very low. I think that there might be even more startups than the good startups with those conditions. But still, that's when we are talking about the compensation, the total compensation, what you can offer. The one thing is that you should be able to offer also some everyday rewards beyond money, like better work conditions, the autonomy, and purpose for your work.
Yeah, it's hard to imagine that like bigger companies would allow you to go to Spain for 2 months doing remote work, or changing with 1 day notice period to 80% work time, or
Give you 1 week extra holiday.
exactly, or any kind of extra flexibility. Because mainly when we are talking about startups, the idea is that if you get your job done it doesn't matter if you are working from 9 to 5 at the office every Monday through Friday.
Yeah. And as mentioned before, in a startup, you will see in the output and you will see and feel the value of everyone's work much easier. And that means that you will also feel the meaning because of the value you are bringing to the company.
Yeah, exactly.
And if you are able to bring value and you want to take responsibilities, typically you will also get that in the startup more easily.
Yeah,
Because there's so many things to do and so many things to test. So all the extra hands are typically very welcome if someone would like to do a little bit more extra and test new things.
yeah. And things are actually moving forward.
Yeah,
Bigger companies, they are usually slower and it just takes time, more decision makers and more processes to do decisions.
yeah. And of course, if the startup is done well and it's a good company, it's growing well, the reputation is good, the brand is good, that will have a very big impact on your employee market value. So if you have that kind of job longer than a couple of months, you will learn a lot, you will grow a lot, you will find you will find a way to learn fast and changing your mind fast and iterating everything quickly. You will learn that kind of culture. That's good for you, but I think that as in your CV, it will be a good if you have some kind of job from some startup, which is not just a pre-seed startup without any other steps and longer journey. But if you have work in a good company and a good startup with a good reputation, that will have a huge impact on your market value.
Yeah, and it's important to remember that also startups, they can grow like really fast. So it's really actually possible that you can start as junior or something at some really small startup.
And
It
you
will
can be
grow
VP of something.
VP of something in 2 years. And the company is like 100x it was when you started. So you are, you started as junior something at really small startup, and now you are VP of something at like proper company.
And you would never get that title from the larger companies
exactly.
without tens of the years of experience and a couple of years in high level startup can get you to the very high level of the experience.
Yeah.
And it can also so you are pretty quickly at the same level than the others who have worked for years, tens of the years in your own industry where you are working at. So I think that that's the one great possibility also in a startup.
Yep.
Okay, here's the 3 key areas of the total compensation. So the fair cash compensation, then the potential of future upside like equity and shares and option programs, and then the other area which you should use as a startup founder when you are recruiting and giving the compensation is that freedom, growth, and a purpose in everyday work.
Yeah.
Okay.
Perfect.
Anything to add?
Nothing.
All right. See you on next episode.
See you.